The first one we are going to do together as an exercise is market mix calculation. So this is a simple report we will encounter on a daily basis if you work at a hotel. So I'm gonna show you a simple calculations on how to find out a segment mix. So let's go into the Excel sheet so that we can carry out actual calculation together. As you can see, this report is giving us already some information. You can see the January, February, March, April, the 4 months. We have a number of room nights given to us, as well as a number of arrivals, number of guests, room revenue, F&B and other revenue, and total revenue. So some numbers have been given to us as a base of exercise. We also know that this hotel has a total room number which is 120. And here in the middle, we have a room night generated from each market segment. So to make it simple, we are using traditional market segmentations only for this exercise purpose. So we have a business individual, business group, leisure individual, and leisure group. And we can see how many room nights were generated from each segmentation. Before we go into the market segment mix calculation itself, let's complete the report first because we have quite a few cells left vacant. So for these empty cells, we will put a correct number by putting some calculation formulas. So percentage of the room occupancy, you know how to calculate occupancy, right? Occupancy equals number of rooms sold divided by number of rooms available. So for the number of rooms sold for each month, you have a number given here under room night. So we have a different number of rooms sold for each month. But I do not see number of rooms available for each month. So we will have to do some calculation first to finalize how many rooms were available for each month. In order for us to do that, we need to use this total room number available as a capacity of the hotel. So we have 120 rooms available with this hotel per day, which means if we want to calculate the total room numbers available, okay, let's say rooms available, we can put the simple calculation. January equals 120 rooms times we have 31. For February, we have equals 120 rooms times, let's say 28 days in February. March, we have 120 rooms per day times 31 days. April equals 120 rooms per day times 30 days. Okay, so we have a number of the rooms available for each month. So January and March, we have same room numbers available because 31 days. And then April 3,600 from 30 days. And February slightly low number because we have only 28 days available in the month. Number of rooms available YTD from January until April. Let's put some total sum calculation. Okay, sum from January until April. So from January until April, total number of rooms available was 14,400. Now we can calculate room occupancy. For example, January should be equals room nights sold 2,902 divided by 3,720. That would be the occupancy of January. February should be equals 2,520 rooms sold divided by 3,360 room nights available. Occupancy for March equals 3,132 room nights sold divided by 3,720 rooms available. So March occupancy was slightly better than the other 2 months. Let's see April. We have total 2,850 rooms sold divided by 3,600 rooms available to sell. So April room occupancy is 79.2%. For YTD from January until April, our occupancy equals total number of rooms sold 11,404 divided by rooms available for 4 months, which was 14,400 rooms. So we have now the percentage of room occupancy for each month and also YTD. Let's go for average room rate. I'm sure you know how to calculate average room rate, but just as a recap, average room rate formula equals total room revenue divided by number of rooms sold. So on this occasion for January, our room revenue was $264,330 US. So divided by total room numbers sold 2,902. That is our average room rate for January. Now February should be total room revenue $226,240 US divided by number of rooms sold 2,520. For March, room revenue $290,066 US divided by number of rooms sold 3,132. April, same, $265,570 US divided by total room numbers sold 2,850. Our YTD average room rate should be total room revenue for 4 months divided by total number of rooms sold from January until April. Here, 11,404. So we can see our average room rate of each month and also YTD. Now let's calculate RevPAR. RevPAR stands for revenue per available room, right? So the name itself shows us the calculation we need to use. Revenue per available room. So equals revenue. In this occasion, we have to use room revenue, not total revenue, right? Because RevPAR is only related to room revenue. So room revenue per available divided by per available room is here, 3,720. That is our RevPAR. RevPAR for February is revenue per available room. RevPAR for March, revenue per available room. April, RevPAR equals room revenue per divided by available rooms here. So finally, our YTD RevPAR can be calculated by putting room revenue total divided by available room number, which is 14,400. That is our RevPAR so far this year. Now we have guest per room and length of stay, which is not very common calculation you will see on a daily basis. But let's take it as an opportunity to talk about it briefly. The guest per room, which means how many guests are staying in each room. So we need total number of the guests staying in January, which was 4,034. And we need to divide this number by number of rooms sold, which is 2,902. that gives us 1.4, which means on average in January we had a 1.4 packs, 1.4 people staying in each room sold. So we can see that we had more single rooms than double room because it's under 1.5. Same thing we can do for February. February guests per room is number of the guests here divided by total rooms sold. Okay, 1.5. So we can see that February we had a more double occupancy or triple occupancies comparing to January. And March, our guest per room equals total guest number 4,260 divided by total room number sold 3,132 rooms. Same as January, 1.4. April, we have a total guest number 4,047 divided by number of rooms sold in April was 2,850. So YTD wise, we have total number of the guests stayed with us 16,020 guests so far from January until April divided by total room number sold so far this year 11,404. That is giving us 1.4. So this hotel we usually have around 1.4 people packs staying in each room sold. Let's calculate length of stay. So we want to find out this time how many nights our guests usually stay. Is it 1 night or 2 nights, 3 nights? If it is a resort, maybe a length of stay could be 5 nights, 6 nights, even 2 weeks. If it is city hotel, many guests will only stay for 1 night or 2 nights. Let's see how this hotel is performing in terms of length of stay. For January, the length of stay equals, we need to have a total room nights sold here. And then we will divide this total room nights sold by total number of arrival. If we do that, if room night and arrival is same, for example 2,000 and 2,000, we can see that every guest stayed with us in January stayed only for 1 night. But that is not the case, right? Number of arrival is only 2,040, but we can see that room night is more than 2,040, which is 2,902. So some of the guests stayed more than 1 night. That's why number of the room night is higher than arrival number. So let's see what is the ratio. We have a 1.4. So we can say in January, on average, each guest stayed with us for 1.4 nights. So which means many guests stayed only for 1 night, and there were some guests who stayed for 2 nights, 3 nights, and 4 nights. But majority was only for 1 night. February length of stay should be equals number of the room night divided by number of the arrivals. 1.3. So February people stayed shorter than January. March equals number of the room nights divided by number of arrival. 1.4. Our length of stay for April equals number of the room nights in April divided by number of arrivals, which gives us 1.4. YTD wise, we have a total room night 11,404 divided by total number of arrival from January until April, which was 8,238. So we can see that length of stay is 1.4 for this hotel. So many, I guess, we can see that a stay for very short time, 1 night or 2 nights. Now let's move on to the main subject of the class, which is market segmentation mix. We have here different number of the room nights given to us. So for example, in January, total number of the room nights sold was 2,902, and this 2,902 room nights were break into the different categories. So we can see that business individual was 1,034 room nights out of 2,902, and then business group was giving us 905 454 room nights. Leisure individual, 429 room nights. Leisure group, 485 room nights. Of course, if we add up these four numbers together, the total should be matching with total room night here for January, 2,902, here 2,902. February, we have a different numbers break into each category of the market segment. Okay, March we have a different number, April also different number. So and YTD wise, total room night 11,404 can be divided into 4,094 room nights business individual, 3,774 room nights for business group, 1,661 room night for leisure individual, and the rest will be going to leisure group. So let's see what would be the market mix of each market segmentation. Let's start with the April. April, business individual was giving us 1,034 room nights out of 2,902. So the percentage of business individual should be equals 1,034 room nights divided by the total, which was 2,902, which is 35.6% of the total room night. Business group equals 954 room nights divided by total 2,902. Leisure individual equals 429 room nights divided by total room night 2,902. Leisure group 485 room nights out of 2,902 room nights. So this is the market segment mix percentage of January. And of course, if you add up these four numbers together, should reach 100% of the business. So you can see the thumb is 100, so it is correct. Now I'm gonna copy and then paste into the rest of the cells. Okay, now we have a YTD number of the market segmentation mix. For this hotel, what we can see is 35.9% of the business is coming from business individual, and 33.1% of the business is coming from business group, 14.6% from leisure individual, and only 16.4% from leisure group. So from this analysis, what we can see is this hotel is more business hotel because almost 70% of the total business is coming from business individual and business group. That was why we had a low number for guest per room was also very low, 1.4, and length of stay was also quite low because this is business hotel. People do not stay for long, just for short time, and also not many guests is staying together with some others. It is usually for single occupancy, especially for the business individuals, and business groups sometimes alone or sometimes with a double occupancy. So this market segmentation is giving us the reason why our number for guests per room and length of stay was quite low as well. This is how we can calculate a market segmentation mix itself and to see the characteristics of our clients. From this report, what we can easily think is, okay, the market mix is quite healthy because business individual and business group is usually giving us better yield, which means better revenue, better ADR. So we should be very happy to have a high portion of these two segmentation rather than leisure individual or leisure group. But on the other hand, because the leisure individual and leisure group portion is so low, which is only 30% of the total business, we can easily assume that maybe the hotel performance over the weekend is not as strong as weekdays. So as a director of sales or revenue management or hotel general manager, what we can think of is, okay, we need to increase the the business level for business leisure individual and leisure group to maximize our occupancy level or revenue level over a Friday night or Saturday night, even Sunday, because that would be our low occupancy period of the week. If it makes sense, shall we move on to the next slide? Now, let's see how a shifting market mix can help hotel improve financial performance. So this is one example I came up with to show you. Okay, this time we are going to use trendy market segmentation mix. So we are not using business individual, business group, leisure individual, leisure group anymore. We are going to use corporate contract, government, MICE crew, public rates, Advantage Plus, inbound, industry rate, and group series and group ad hoc as our market segmentation mix. And we can see that based on this current market mix, we have a different average rate per market segment, and also we have a different revenue contribution from each segment. So from here, what we can easily see is this hotel is a very successful hotel because you see the total number of the room sold is 480 out of total inventory 500. So our occupancy is already maximized. It's a very high occupancy hotel. So there is a very limited action plans we can take in order for us to maximize our revenue further. So what we can think of is now, rather than increasing our occupancy from 480 to 500 full house, why don't we play with our market mix to maximize our revenue? That is the main purpose of this exercise. If you see the current market segment mix, we see 15% of the total business is coming from corporate contracted, 7% of the business from MICE, 20% from public rates, and 10% Advantage Plus, 25% from inbound travel agent, and only 2% from industry staff rate and so on, and 20% of the business is coming from group ad hoc. From this mix, this current mix, what we can assume is we have an opportunity to get more revenue or higher ADR if we can replace some of the group ad hoc booking or inbound travel agency booking with public or corporate or MICE booking, because at the moment 25% from inbound travel agent and 20% from group ad hoc is quite high portion from our total business. So as a high occupancy operated hotel, we should aim to reduce our inbound travel agent and group ad hoc portion and increase our market mix portion from corporate or MICE or even public rates. So let's try to do that. We have an average rate from each market segment. If we want to maximize our market mix from corporate, MICE, and public rates, what we can possibly do is we need to lower our average rate to sacrifice and get a more volume. So what we can do is, instead of selling $200 for corporate contracted, why don't we lower this rate down to 180 and try to increase our market mix to 20% instead of 15. Same for MICE. MICE at the moment is giving us a very good average rate, which is 260. But maybe it is one of the reasons why market mix is only 7%. So by giving a much more attractive rate to our sales team, they might be able to increase MICE business. So we do not sell 260 anymore. We will sacrifice the rate from 260 to 230. And hopefully this strategy will give us better business on this particular market segment. So instead of 7% of market mix, we should be able to increase our market segmentation mix to 12%. Same for public rate. Public rate is, we are talking about the office phone call, fax, and email, but majority of the booking should be made by online, either direct channels or indirect or OTA channels. So if we decrease our selling rate online from 290 to 260, it is very obvious that we should be able to get some more volume. So we are expecting to increase our market mix from 20% to 25%. On the other hand, we want to reduce some of the segmentation production. So if we see the inbound travel agent, at the moment we are selling 140 US dollar and we get 25% of the total business from this particular market segment. So why don't we increase this 140 to 170? Why don't we increase our rates from 140 to 170, and hopefully this increase will give us less business from 25% to only 15% of the market mix. Same strategy here applied for group ad hoc. Current average rate is very low, 120, and because of that, our market mix for this segment is very high. 20% of the total business is coming from group ad hoc. So instead of doing this, we will increase our ADR from 120 US dollar to 150 US dollar, and hopefully the contribution will go down from 20 to 15. If we do that, let's see what kind of a change will happen in our financial performance report. Okay, so let's try to do it on Excel spreadsheets to calculate the impact that we can create by manipulating market mix. Here we have a current situation with room nights sold, percentage of the mix portion, and average rate of each market segment, and room revenue contribution from each segmentation as well. So we can see total 480 room nights sold, and average rate and room revenue. So total room revenue generated on this occasion is 89,296 US dollar. Now we want to manipulate this market mix into the new percentage. We want to have a 20% market mix for corporate contracted. So we are lowering our average rate from 200 US dollar to 180, and mix will be increasing from 15 to 20. Room night sold will be 20% of the total room night, 480. Government still zero. MICE, we want to have a 12% of the total room night, 12% times 480, and crew zero. And public rate, we are decreasing the average rate quite dramatically. It used to be 290 US dollar for the average rate of public rate segment. Now we are lowering the price to 260. Hopefully this pricing strategy will give us 25% of the total business coming from public rates. Room night equals 25% times 480. Advantage plus, no change with the rate, no change with the market mix, it will be same, so 50. Inbound travel agent, now we are increasing our rate. Used to be 140, now we want to increase our ADR to 170, which will reduce the market mix percentage as well. So from 25%, now we are aiming to achieve only 15% of the total room nights, equals 15% out of 480. Industry start rate, same 2%, which is only 10 room nights. Group series, none. And group ad hoc, also we are increasing the group ad hoc rate. Previously 120 US dollar, now we are aiming to increase it significantly by 30 US dollar. So which means we are losing some group bookings from 20% to 15%. 15% equals 72 room nights. Now we have the room night per each market segment and then average rate. Let's calculate the room revenue per each market segment. Room revenue contributed from a corporate contract will be equal 96 room nights times average rate 180. If we copy and paste into the all cells, now you can see the room revenue contribution from each market segmentation. MICE will give us $13,248 US, public rate 31,200. Inbound travel agent will give us 12,240, and revenue contribution from group ad hoc will be 10,800. Let's see what is the total room revenue we are generating. It will be 94,768. So comparing to the previous scenario, we can see that our room revenue is increasing without selling more rooms or without increasing our average rate for the major segment. So this is a beauty of market segmentation manipulation. Okay, let's compare our average rate of two different occasions. So first scenario, our average rate equals total revenue divided by total room number. So average rate was 186. Now you can see our average rate is changing. 94,768 US dollar divided by 480 rooms. Our average rate is 197 US dollar. RevPAR is also different because RevPAR equals revenue per available rooms, which is 500. RevPAR used to be 179. Now our new RevPAR should be 94,768. Revenue per available room 500. Yes, so our new RevPAR is 190. From this exercise, we can easily see that our average rate and also room revenue RevPAR is increased by 6.13% without increasing any average rate of a major segment. Okay? So market mix manipulation is sometimes a very strong, powerful tool you can utilize as a revenue manager or a sales and marketing team to maximize hotel's revenue when occupancy level is already maximized for the certain period of time. Hopefully it's clear enough. Shall we move on to the next slide? This is the last exercise I have prepared for today. It is called profit contribution per segment. It looks quite complicated, but what we are trying to do is, so far we were only looking at revenue side. But at the end of the day, what's important is profit. So I want you to remember this. Revenue management should be exercised as per the profit contribution from each segment. So even though we can manipulate market mix and try to have a better revenue performance, if it doesn't result in the increase in terms of GOP, that is the effort wasted. So what I'm going to show you is how to identify which segmentation is important, not only in terms of revenue, but also for the profit margin contribution. So let's have a look at this exercise together. Here we have a different market segment: full rate room only bed and breakfast, corporate bed and breakfast, leisure individual bed and breakfast, professional group, residential group, tour group bed and breakfast, tour group half board. Half board means breakfast plus lunch or breakfast plus dinner, and airline cruise, and day seminar. Day seminar is a full day meeting without any rooms. And you can see that when it comes to leisure individual bed and breakfast, tour group, tour group half board is all having a double occupancy because you hardly travel alone. So this is something we need to take into consideration when we calculate the expenses that related, also the contribution for a profit margin. Now we have a revenue side here. This is for revenue, and then we have another side for cost. This is for this top upper side is for per pack, and then the below we are talking about revenue and cost per room night sold. Let me show you what we are trying to do here. We have a revenue contribution per packs in terms of each market segment. You can see that full rate has a more revenue contribution comparing to the tour group or leisure group and airline. And then we have a different breakfast breakdown, revenue breakdown. Full rate, we break down 12 US dollar given to F&B. Leisure, individual, tour group, airline is we give 8 US dollar, and then professional group, residential package, $10. Just want to add that in my own opinion, it is not very good idea to have a different revenue contribution or revenue breakdown for F&B side. The reason is, if we give different revenue according to the market segment, it's very difficult to measure the cost controlling efforts from executive chef and F&B production team. Because for example, if we have a more full rate or corporate bookings coming in for the certain period of time, our food cost will go down because revenue breakdown is higher than usual. And on the other hand, for certain period or months or years, if we perform better for tour group or if we have an additional airline crew, our food cost percentage will go up because we give less portion of the revenue as a breakdown to F&B. So in my own opinion, it is not very fair for the executive chef to have a different breakdown for breakfast, because at the end of the day, your performance should be able to be shown. It should be able to be presented, but it is not possible on this occasion because your food cost will be heavily relying on what kind of business the hotel will have or what kind of business the sales and marketing team will bring to you. So that was my own opinion. Anyway, let's keep going. So we have a revenue contribution per meal, lunch and dinner, $20 for residential package, $17.5 per tour group. Once again, I think it should be same. A day seminar, $30 US. Meeting room contribution. So if we have a $20 for meeting room rental, okay, and $15 per pax for coffee break. There's a cost. Okay, so you can see the room cost will be all same. Yeah, it doesn't matter which market segment. There's no difference in terms of cleaning cost. So $15 US to clean one room, and then we have a $6 to serve one guest for breakfast, and $8 for lunch and dinner. And then a meeting room usually have a zero cost in terms of the variable cost. Of course, there's some fixed cost, but we do not count on this occasion. And there's a coffee break, which is around $4 US. Now this is for packs. We want to calculate what would be the revenue and the cost per room, per booking. So here we have a full rate room, which will be exactly same as above 95. Full rate, so room revenue doesn't change. So we can just copy and paste here. Breakfast is a little bit different because if it is a single occupancy, the revenue per room it should be same as revenue per pax. So still revenue 12, corporate 12, leisure individual is 2 pax, so revenue should be double, so it's just 16. Here professional group 10 same, residential group 10 same. Tour group should be double occupancy, 16 for breakfast. Half board same, 16. Airline crew, single occupancy. When it comes to lunch and dinner, we need to be careful because residential package usually include 2 meals, with the exception of the breakfast. So we need to count lunch and dinner, so which is twice. So the revenue contribution from residential package will be the 2 times of $20, which is 40, because we have 2 meals. And tour group will have only 1 meal because it's half boat, but it's double occupancy, so we also need to double 17.5, which is $35. Meeting room contribution will be same. Sorry, we missed here. Day seminar meal should be 30. Okay, and coffee break. For the residential package, we have a 2 coffee break, right? Morning coffee break and afternoon coffee break. So revenue contribution from coffee break will be 30, because 15 times 2. And then day seminar also have a 2 coffee break. So revenue contribution should be 30. Okay. Now let's move on to total cost. Total cost of the room should be same here, so no change, $15. Breakfast cost was $6 per person, which means for the single occupancy it's all 6. But if it is a double occupancy like a leisure individual bed and breakfast, should go up to 12 instead of 6. Okay, professional group, residential group, or 6. Tour group, bed and breakfast tour group half board is all double occupancy, so breakfast cost should be 12 and 12. Airline 6. Bill for room here, $8 is the cost for lunch or dinner, and residential group will have 2 meals, right? That's why the revenue was double here. So the cost same. Cost should be counted 2 times. 8 times 2 equals $16. Tour group half board, we have only 1 lunch or dinner, but because it's for 2 packs, the cost should be also double from 8. So it should be $16. Meeting cost should be still 0. Here 0. And day seminar, the cost should be 8. Okay. Coffee break. Coffee break, a residential group will have a 2 coffee break. So 4 times 2 equals $8. And then day seminar also have a 2 coffee break, 1 in the morning, 1 in the afternoon. So cost from coffee break should be 8. Now we have all the revenue component and then all the cost elements already in place. Let's calculate what would be the total revenue generated by each segment. Okay, we have full rate room only. We have only room revenue, so it should be 95. Here we have room revenue and breakfast, and then here corporate individual breakfast. Okay, should be same. Only room and breakfast, and leisure individual. Okay, so now we can just copy and paste our formula. Okay, you can see that we have a different level of total revenue contributed. So you can see in terms of the revenue, residential group is giving us a lot of revenue. So from sales point of view, this is very important segment, right? Residential package, residential group. And second highest one is tour group half board, $121. So this is something we need to discuss later, but we can see that a tour group half board is a high performing market segment in terms of revenue contribution, followed by full rate bed and breakfast and professional group. Let's see the total cost. When it comes to full rate room only segment, there's no other cost apart from the room cost. So it will be only 15. Let's copy and paste. Yes, and then you can identify different cost level. You can see the residential group has a very high cost, $45, and this one tour group half board also have a very high cost involved, followed by leisure individual bed and breakfast, and Yes, tour group, bed and breakfast as well. Now we have a total revenue contributed by each segment, and then total cost element by each segment. We can calculate the profit for each segment. Let's do it. So here, $95 for revenue minus total cost 15. So profit contribution from full rate room only segment per room is 80. Let's see how the other segment is doing. Yes. Now we see a different profit contribution per market segment. We see that residential group segment still have a very high contribution because the revenue was very high. And second, the most strong segment in terms of the profit contribution is full rate bed and breakfast, $86. So each time we sell one room with a full rate bed and breakfast market segment, we are getting $86. And third most strongest, highest with the highest profit contribution is full rate room only, which did not give us the good revenue contribution, right? So when it comes to revenue only, full rate room did not appear very strong, but now it's slightly different when we look into the profit side. So full rate room only becomes quite important segment. And if you see the yellow cell, we have identified three segments which has a very low contribution for the profit margin. You can see that leisure individual revenue was okay, but the profit contribution is very low. Tour group bed and breakfast revenue was so-so, but contribution in terms of profit is very low. And airline, yes, of course, it's very low. So we can now see that revenue contribution and profit contribution is not always matching. Sometimes, for example, professional group appeared as a very good segment to push, but if we look into the profit level, it's not really the case. This way, we can identify what is our potential growth in terms of the hotel GOP and profit margin by pushing certain specific market segment. So as a revenue manager or general manager, financial controller or sales director, it's very important to look into the cost element and also a total contribution made by each market segment, so that when we make a business planning or sales marketing strategy, this information and analysis result will be taken into account so that our efforts and extra sales activity will result in the performance improvement in our GOP bottom line. I think that's it for today. So we had the opportunity to go into 3 different reports today so that we can actually calculate market segment of each segmentation, and also we had the opportunity to manipulate market segments so that we can witness ourselves that a market, depending on the different market mix, we can maximize our ADR and even room revenue. And finally, we had the opportunity to see that we have to consider the cost element and profit margin of each segment so that when we compile our action plans and business strategy, we do not only focus on the top line, but also we consider the great result on the bottom as well. Hopefully, you found today's GM's class useful. If you have any further questions, any suggestions for the future classes, please leave your comments and I will take it into consideration for my next class. Thank you for watching this super boring video. I look forward to welcome you back to K Hotelier CC. Thank you very much. Bye-bye.